Hello and welcome to another Smaulgld live cast. Today is Monday, August 13th, 2018. And today we're going to be talking about how the de-dollarization crowd gets smacked with reality. First, let's take a look at the reality of the markets today. There was a smackdown there as well. Gold fell below $1,200 all the way down to right now $1,191. It opened the day at $1,208 and closed the day around $1,192 and has since slid in the aftermarket to $1,191. Silver also broke a key level of $15. Silver opened at $15.26 and closed below $15 and is now trading at $14.96. So both gold and silver on the way down. Oddly enough, the dollar index also down slightly. However, the dollar index has been on a tear of late, and we're going to talk about that as well. Cryptocurrencies also getting a smackdown. However, an interesting development in the crypto markets is that Bitcoin itself relatively unscathed at about $6,300 today. Little change. Ethereum down 10%, at one point down nearly 13% to 286. Bitcoin Cash below 600, below 550, down about 7% to 535. Litecoin holding up better than the other two, Ethereum and Bitcoin Cash, but still at $57. This represents a significant decrease from their valuations just 8 short months ago. Bitcoin dominance. This is interesting. Bitcoin is now worth 53.1% of the overall crypto market. It had fallen into the 30s at the height of the crypto mania at the end of 2017, early 2018. Clearly seeing some consolidation in the space, with the top 5 and top 10 cryptocurrencies now accounting for about 80 to 85% respectively of the overall crypto market. Also in today's news, Peter Strzok, or Strzok, whatever his name is, the guy who was leading the Hillary Clinton investigation and also the guy who was on the beginning of the Donald Trump Russian collusion investigation, was fired today. Now that's a first. Surprised that he has been at his job for so long, but he was indeed let go today, and there wasn't much defense of him. I was surprised, but he was fired. All right, let's take a look now at what's happened to the de-dollarization crowd, because we've been hearing for months, years, even a decade or more, dollar collapse, end of dollar hegemony, all these stories. The BRICS have had it. This is what de-dollarization looks like. Gold back yuan. Central banks buying gold hand over fist. They know what's coming. They're smart. Game changer. Game over. They're buying gold for the reset. They know what's coming. All this nonsense about how the dollar's days are numbered and everybody puts a date on it, and then when that happens, gold's set to skyrocket. Now, one thing is true. When currencies collapse, the price of goods and services in gold in those currencies does indeed skyrocket. And we're seeing now what's happened with currencies that are collapsing against the dollar and against gold. Let's start out with our friends in Turkey. The Turkish lira. Let's give you I'll put up a chart for you. The Turkish lira has been absolutely clobbered. Now, the problem that Turkey has is not so much a sovereign debt problem like the United States may have with issuing a lot of debt. They have a corporate debt problem. They have a lot of external foreign banks, foreign entities investing in Turkish bonds, and a lot of them aren't doing too well. Now, here's the problem. and I guess people don't quite fully comprehend this, a lot of those debt securities are not denominated in lira. Many of them are denominated in US dollars. So what does that mean? Well, it means that when the value of the dollar goes up and you are making money in lira, and now you're issued a bond and you have to pay, you have to convert your lira into dollars in order to pay your bondholders. But the liras don't get as many bonds as they used to, as many dollars as they used to, because that's what the currency that you're going to pay in, and boom, you are hosed. So as you can see here in this chart, this is in August alone, the price of gold versus the Turkish lira has gone up 36% just from the beginning of August, end of April. And this is only through Friday. I didn't include today's. I don't have it updated yet. So, as much as Turkey wants to complain, they had pictures of Turks outside burning dollars. It's a lot more complicated than people just think. They don't like the dollar and they are de-dollarizing. They're really not. They want to, but when countries like China, like Turkey, like the rest of the world issue dollar-denominated debt, they are in deep for the dollar. They don't want the dollar to go too high and they don't want their currency to go low, but they know that it's very difficult for them to issue debt and therefore run their economies, because these economies are run on debt, unless they issue dollar-denominated debt. Everyone focuses on the fact that the U.S. issues a lot of debt and the U.S. has a lot of foreign debt, and then they get all excited. They say things like, well, China doesn't owe anyone anything. They have all internal debt. Yeah, but a lot of that is denominated in dollars. Most of it is. So they are tied into the dollar system. It's not as simple as the BRICS have had it and they're now going to barter with gold with each other. I think someone said today, it was amusing, he said that's what cavemen did. Barter. I mean, the world runs on dollars. Despite the protestations of the countries that don't like it, they're not really, have not made any inroads or outroads of getting away from using the dollar. It's a simple fact. But yet the gold pumpers pump that story to you. End of dollar hegemony, dollar collapse, and they point to the dollar's weaknesses. All those weaknesses that the dollar has, all the currencies have in spades. They're all addicted to debt. They all issue plenty of debt. Many of them issue them in excuse me, in dollar denominations. So when you have that, they're reliant on the dollar, and when their currency starts to fade because they have the problem that everybody predicts the US will happen, and eventually it'll probably happen to the United States too, they get hammered. But here's the good news, at least as a, you could say it as maybe a warm-up for it. When a currency does go down, when a currency does start to lose its grip versus the other fiat currencies, the price of gold in that currency does rise, as you can see if you're looking at your chart right there on the screen of the Turkish lira. But it's not just the Turkish lira that's having this problem. We can look at the price of gold in other currencies as well, and you can see that the value of the gold goes up when the currency declines. The problem you have to remember is you can't, if you're a Turkish person now of modest means, you really can't buy gold now. It's too expensive for you, almost, in a way. So the time to have your gold is prior to when your currency collapses. Now, the problem is a lot of people think that it's the US dollar that's going to go first. I've held for, as my thesis is, the dollar is the last part of the fiat currency system that goes down. This idea that the BRICS are going to crush the dollar. They'd only be crushing themselves. Same with China. They have no interest. They may try to get around using dollars if they want, but they cannot crush the dollar without crushing the entire system themselves. And then there's this nonsense about, well, that they have gold and they're ready for the reset, not realizing how little gold they actually have. So, for example, Turkey's top 10 gold holdings are worth about $20 billion. They got 600 tons. That's not a big amount. That's not a big deal. Nor are Russia's 2,000 tons are worth about $80 billion. So this idea, you have to look at the numbers. You can't just say they're buying gold hand over fist. That is all I need to know. And think about it. All these countries that are buying gold, that have gold, Turkey, Russia, Iran, Kazakhstan, countries with the worst currencies, and no matter how much gold they've added, because they just haven't added enough maybe, their currencies still get clobbered. Now, and a lot of people think that, well, I am like those countries. I'm going to be like them. They are smart. They are buying gold. You're not like them. You don't have a depreciating currency, and you don't have a gold mine in your backyard. However, one could argue that you're better off than they are, and that if you buy gold, you actually can buy it in amounts that can ensure your portfolio, whereas they can't. It hasn't helped Russia really at all to have 2,000 tons of gold. It doesn't hurt them to have it, but it hasn't really helped them in a meaningful way. And Turkey hasn't helped them at all. They've been clobbered. Let's take a look at Russia. Now, Russia, with all the gold they have, it hasn't prevented the price of gold soaring against the ruble. As you can see, you're up to 82,000 in just the past 18 months here. The gold has gone up 21% versus the ruble. It's gone down in the United States about 7 or 8%. So you can see that having gold as a country on your central bank's balance sheet doesn't protect that country. When people say they know what they're doing, they know what's coming, they're protecting themselves. Now they're actually just giving themselves some cushion. But they're not actually protecting themselves, and they're certainly not in a position now to crush the dollar because they have gold, and they're going to roll it out into a stadium and then say game over, game changer, or they're certainly not going to back the ruble or back the yuan. These countries are all debt-based, and the king of debt-based economies and the king of all fiat currencies is the US dollar. Lest you not understand that, look what happened in the last few weeks. All this nonsense about China and the BRICS have had it. They're going to crush the dollar. Rupee is one of the BRICS. Indian rupee clobbered today at the all-time low. South Africa, I don't know why anyone would be cheering them on as a part of the BRICS. They've had it too. Price of gold in, well, the South African rand flash crashed 10% today. These are not stable economies. They are not stable politically. The fact that they may or may not have gold really should have nothing to do with your financial analysis. The fact that they have gold is prudent. The fact that Kazakhstan has 43% of its reserves in gold doesn't prevent its Kazakhstan tenge or whatever they have from going down in value. It doesn't help. It doesn't hurt. But the idea that somehow they're smart and they're going to be part of like this new, they're going to be sitting pretty after the reset. That's just nonsense. That's gold pumper nonsense that people want to believe. But the reason you believe it, I believe, now we're getting doubles, is if you are a citizen of Kazakhstan or Turkey or Iran or Russia or any of these countries with these horrible currencies, you are better off as a citizen having and owning gold before your currency collapses. Argentina, Brazil, because you do protect your purchasing power. Now, you could also have coffee beans or other items, real assets, cigarettes, that'll go up in value. But the advantage of having gold in these currencies is, at that point, it can be used as a very easily exchangeable asset for your currency. So if the price of bread goes up 3 times, generally, in lira, for example, then the gold price probably went up about that amount. So you can exchange a small amount of that gold for the lira, if not even just use the gold as currency. That might not be possible, but you can go to a Turkish bank, and that's what Turkey wants you to do. They want you to sell your gold. And I would think you would sell your gold for necessities if you lived in Turkey. So that's a very instructive example of how gold is going to protect your wealth better than any other commodity, because You might not be able to barter your coffee beans or barter whatever asset you might have that also is going up too. Maybe even going up higher than the price of gold in your debased currency. So there's a lot of truth in the fact that having gold protects you against a currency crisis. The mistake that most people make is listening to these people telling you it's the dollar that's going down next week. They've been saying that for years, decades, and they keep predicting it. And what they then do, which is astounding to me, is they make it sound like the dollar's at risk, and they don't mention Turkey, Iran, Russia, China, all countries with massive debt issues, big problems. But because these countries may be buying gold, well, they are smart and they know what they are doing. And therefore, I'm going to be like them. You're buying for the wrong reason. You should not want to buy gold because you're like Turkey. You have a lot of bad debt. You have a horrific political situation internally. You might go under sanctions. You might have tariffs thrust upon you. And then you have some gold. So you're better off than the United States? You're not. And the same with China. They have all this massive debt. And in order to keep their economy going, they have to issue more debt. They have to build more bridges, more parking lots. They have to issue more dollar-denominated debt. But they have gold, and they are smart. And they know what they're doing, so I support China. China is my gold buddy. That's all I keep hearing with this stuff, and it is astounding. But today should be at least another smack in the face to show that here's Iranian Rial. I'm going to show you this one. These countries are not going to teach the United States a lesson because they've had it, and it's de-dollarization. I'll give you another story today. Malaysia, remember they canceled that $20 billion Belt and Road. My Belt and Road, my Belt and Road. China's going to take over the world. They have gold. Malaysia basically said today they're canceling all Chinese projects. Now, I'm not cheering this on. I've always said that the Belt and Road is no more than an extension of the debt-based Ponzi scheme that they run inside their country, building up infrastructure. Except when they do it externally, they're trying to make a big profit off of it. And Malaysia wised up and they said, well, this might not be a good idea to have all these projects. And there's stories of them building places where the country can't pay the debt, and they say, okay, well, we'll just take the port. So I still don't understand when a country buys gold and then everyone thinks that that country is their gold buddy and they are smart and they are better than the United States because they like gold. And that includes Russia, China, Iran, Turkey. Now think about those countries and think about what you've heard about them. You probably don't want to live there. No, but they like gold. And I guarantee you, go there, you talk to people, the first word out of their mouth isn't gold. The second word out of their mouth isn't gold. You may never even hear the word gold when you talk to people that live in those countries. But it's been built up in your head that the average person in Iran wakes up and says, where's the gold? And that in China, there's these crazed damas running around looking for gold. And it's because they are smart and people in the West are dumb and they don't understand gold. So there's smart reasons to like gold. But it's not the countries that are having horrific troubles with their own finances that because they buy gold, that's smart. It's not the same as an individual in those countries buying gold. When an individual buys gold in a country with a crappy currency, they are smart. They'd be foolish not to think that they're going to be okay because they have Iranian Rial or Turkish Lira or Kazakhstan Tenge or Chinese Yuan, which can be devalued at any moment. What people do in the United States, they make it sound like it's the dollar that's at the biggest risk. They're all at risk. All fiat currencies are at risk. But the kingpin of the fiat currency system is the dollar. And that, I would imagine, would be the last one to go. They're all in massive debt. They all rely on the dollar. So that's not going to happen. All right. I think that's about it. Let me see if I had anything else that happened today. Now, here's a question I asked, and you guys can answer this. I asked in a full-blown financial crisis. I got 100 votes on this one. What would you buy? Would you buy gold? Would you buy Bitcoin? Would you buy silver? Or would you stockpile cash? This is in the lead-up to a full-blown financial crisis. Now, my answer would be I would buy gold. Because in a full-blown financial crisis, I would be expecting to see my currency go down. Just because, but some people say stockpile cash because they think, well, if they have cash, they can buy the assets on the cheap. So now in 2008, the answer was both. If you had bought gold, you would have lost initially, and then gold skyrocketed. If you stockpiled cash, you would have had a lot of money to buy all the assets that the Fed pumped up. Let's see. Kremlin says backs use of national currency for bilateral trade. Yeah, of course they do. Well, Russia also said today they're going to cut holdings of U.S. securities. They're going to cut U.S. holdings of securities. They have none left. So I don't know what they're threatening now. So this is where you can see where these countries are weaker than the United States. Their currencies are weaker than the United States. China announced their recent loan amounts. They're not deleveraging at all. They tried early in 2018, but March, April, May, June, July all increased in the amount of new yuan loans. Yeah, don't worry, it's just internal debt. Announced today, Chinese bad loans surge most on record amid supposed deleveraging. Then my Belt and Road, end of dollar hegemony. Prime Minister of Malaysia says his government will cancel all major infrastructure projects backed by China. So China is not taking over the world, just as Japan wasn't taking over the world. You can argue all you want that the United States has too much debt, reckless fiscal policy. Fine. That's what the world system is based on. Reckless fiscal policies, reckless monetary policies, both working in tandem, low interest rates, negative interest rates, stimulus. That's what you have going on globally. The fact that a country like China might have gold doesn't mean they're into sound money. It just means they have some gold. Okay, I think that's about it on the monologue. Let's see what we got on the comments over here. All right. Gus the Broken is back from the Netherlands. Good to see you, Gus. Robert Plant, Ship of Fools. Gus, when you put up links to music, it's counterproductive because no one's going to be listening to music while they're listening to this podcast. And they don't show up the links. YouTube pulls them off. So I like that song, but we're not going to start singing it together. So you really shouldn't be posting music videos while we're having a podcast. Turkey contagion fear, says Gus the Broken. Turkey's lira fell almost 9% in early trading when investors fearing the country's financial crisis may spread to the European markets. The currency plunged 20% on Friday. Let's talk about that for a minute, Gus the Broken. Now, there are some countries that are heavily invested in Turkey, and this is a potential for contagion. It's a small market, Turkey. It's not that it's big, but there's a lot of foreign investment in Turkey, a lot of corporate debt being issued, and as I mentioned at the top of the show, a lot of it is in US dollars, and these Turkish companies don't have the US dollars to pay, so definitely keep an eye on that. That's a good thought. Jasir Roberts says, uh-oh, US TRY, very clear message to Putin. Absolutely. About playing ball, in my opinion. No, I agree. That is definitely what's going on. What is the price of Bitcoin in tulip bulbs? Spence Beal, I think you're new here. Welcome. 52% or something like that is traded in US dollars in world. Okay. Mate or mate also looks like new. Gold is not increasing in value. Holds value. Holds value. I know what you mean. You're absolutely right. That is absolutely true. The reason you can never say gold is going up, because gold doesn't do anything. Gold it's a benchmark. It can't improve itself, but by the same token, it can't default, it can't degrade, it can't make a mistake, but it can't do anything better than it already is. So that's a very good observation, mate. Gold is not increasing in value. The currency is becoming worth less until it becomes worthless. That's right. And he says gold holds value. Now, that was my point about coffee beans or spoons or mugs, whatever it happens to be. They just become more expensive in the currency because the currency is going down. Gold doesn't skyrocket. I use those terms like gold soaring and so on, but it's not real. You're absolutely right. It's the currency that becomes worth less, and that anything you want to buy, including gold, is going to be more expensive. So yes, gold holds value, but the advantage of gold holding its value is, as I mentioned, it's hard to ground up your coffee beans or your other commodities and try to sell them. Gold is much more universally accepted and easy to sell for your local currency. Joshua, gold is a capital storage mechanism with no counterparty risk. That's buttressing the point. That's right. No counterparty risk. It doesn't. It just is. It's its own item. It's debt free. It's sui generis, as they say en français. Actually, that's Latin. Thing unto itself, which used to function as a basis for fiat monetary value prior to the erection of the cartel and debt hologram. That's absolutely true. Gus the Broken, cigarette money. That's right. More than 1.7 billion has been directly invested into tobacco company stocks by healthcare providers, fire authorities, and schools via UK council pension funds, The Guardian reveals. Joshua says, obviously in global fiat paradigm, where central banks have rigged the price of money, precious metals can no longer be able to have market value. And that is an issue with the price of gold. We talked about this the other night. We were talking about how a lot of the gold's monetary value has been removed because even these countries that are smart and are buying gold, they don't have that much in dollar terms for it to matter. So the value of gold as a monetary asset has gone down, and it still has value as an asset, partial monetary, but just as an asset, as Matthew points out, it goes up in price versus the currency because the currency is actually going down in price. And because gold is still universally accepted, it can be used as a currency. So no matter what they try to do about eliminating the monetary value of gold, what they can't do is eliminate its properties. And its properties are ideal. To say, okay, well, if gold is valuable, how do I sell gold? Well, it's divisible, it's fungible, it doesn't have these issues with trying to slice cattle into two. So it's definitely, it has all those properties of money, and you see it used as money when you have these currencies in crisis. And while we're talking with Joshua, that is Joshua's artwork there, Mug Life. And Mug Life is about the Smaulgld mugs, and that mug has definitely got it going on. He not only has a stogie in his mouth, he also has, he's got a gold and silver chains. Now remember, if you want the Smaulgld mugs, you can visit the Smaulgld store. And on the Smaulgld store, at the Smaulgld store, you can provide a variety of Smaulgld products, including the Smaulgld Espresso mug, which is smaller than the Smaulgld Classic and Super Classic mugs. You can also buy the Smaulgld Travel mug and take Smaulgld to go. I'll leave a link for that. And if you want to buy the Smaulgld Classic and Super Classic mugs, just go to the website. Those are the mugs that I actually send out directly myself with a handwritten note. I'll be going to the post office tomorrow. If you'd like to buy a classic or super classic mug, I'll leave you the link for that as well. It does help out the site. I've got it down now to, I was losing about $4 or $5 per mug the way I was handling the shipping and the purchasing. I now, on the ones I ship out, if I'm lucky, I might make $2. I might make $1. Now, if you buy from the store, I shouldn't be telling you my finances here. If you buy from the store, there's like a built-in $2 or $3 profit per large item and like 50 cents on the smaller items. But it does help out, and they're great products because, as you know, there's at least 18 reasons to buy and hoard mugs. All right, let's see what else we got. Buy more FANG stocks, says Spence Beal. Short Air says chat is broken. Oh, how so? I see it. All right. 19 reasons to buy mugs, says Joshua Robb. ASMR people. What I've wondered is what is happening to the coinage in these hyperinflation countries. As the currency value decreases, one would figure the base metal of the currency becomes more than the face. Okay, let's take a look now at the United States coinage, right? So a penny, definitely. If we were to have a currency crisis, a penny had, when it had copper in it, those pennies are worth like 2 cents today. Even with zinc, the penny could be worth close to a penny today, the zinc value of a penny. A nickel today, which is 75% copper and 25% nickel, that's worth, I think, let me just check the prices. They go up and down with the price of nickel. But a nickel can be worth anywhere between 4 cents and 7 or 8 cents, depending on the metallic value. However, once you get, I got them right here. Okay, so a 95, an old penny right now is worth 1.8 cents, meaning the copper penny. The new penny is still worth, no, it's worth 0.6 cents, so it's not worth quite a penny. But a quarter today, the metallic value of a quarter with that nickel and copper is worth 3.7 cents. So the quarter would have to really, the value of the metallic metals would really have to skyrocket for that quarter to be actually even worth a quarter in metallic value. Now, when it was silver, clearly you were in, if you had 90% silver coins in Turkish lira, and then this happened, that money would be pulled out immediately. But the small change still doesn't probably have more than the face value because the base metals are still relatively cheap. But it's a good question, and clearly, in the case when there was silver in the coins, you definitely would have made out, and they probably would have made it illegal to take them, illegal to melt, illegal to leave the country, and so on. Where's Barry? Is it because these countries are printing the money to buy the gold that correlates the buying of gold to decrease in currency value? Now, is it because why? Now, you're saying that you think that the countries, this is Where's Barry, print the money to buy the gold. I don't think they do. I don't think that's how they acquire their gold. But then you're saying that correlates to the buying of gold to decrease in currency values. I don't know what the question is, but I know that what Ergodon wants the people to do. Back in May of 2017, I wrote an article about how he had asked his people to buy gold, not dollars. And now he's saying sell dollars, sell gold, and buy lira and put it in the bank. Now that makes total sense. What he's saying is that in order to protect the lira, he wants you to sell anything but lira, and he wants you to buy lira, and then he wants you to put that lira in the bank, which in a sense will buttress the banking system, will make the lira stronger. I don't know how much gold the Turkish people have, whether that's actually going to help. Because as I mentioned, even though these countries that are buying gold hand over fist, the amounts that they have do not support their currencies. Even Kazakhstan with 43% gold reserves, they don't have large enough reserves for it to matter. If they had 100%, it wouldn't mean that the currency, the value of all the currency that's out there is backed by gold. It would just mean that in their bank they have a certain amount of gold. China sells jewelry at a high markup to its citizens. Spence Beale, that is correct. And from what I understand from, I think his name is Joseph DeMarco, he lived in China for about 15 years. He says a lot of the gold that the Chinese buy isn't, like, they're not stackers. They don't buy bullion to the same extent that they buy gold with high markups. He says they buy these medallions, they buy jewelry at a markup. They don't buy it as a price of a monetary value, price per ounce. They buy it more because they can. And this is a point I made on another podcast, that the price of gold partially is based on the demand for non-monetary reasons. In fact, jewelry demand is twice the demand as investment demand. So a lot of Chinese and Indians, when they buy gold, they're not necessarily buying it for the collapse or because they want to be like Turkey and buy gold because they are smart. It's because they have an historic affinity to it. They do realize it's valuable, but it's not the same as they look at like the debt ratios and that's why they buy it. They buy it for more intuitive and for more philosophical and for the beauty of it as well. It's not just because they buy it per ounce. All right. ASMR it does, which is why countries like the U.S. took silver and gold out of the currency. Yes, that was the point I was making, Matt, is that for silver and gold, clearly, but in cheap metals, the quarter, you'd really have to have a ratcheting up of the copper and nickel prices for a quarter to be worth 25 cents in metallic value. It's only currently worth about 3 or 4 cents. And then the 50-cent piece is probably worth a nickel. and you know, the price would have to go up tenfold of those metals. Joe Smith. So what's the alternative for countries with non-reserve status crap fiat? Well, they don't really have a choice. And this is why I say, when it's important for them. It makes sense. Yes, they are smart to buy gold. If you're Kazakhstan, if you're Russia, if you're Iran, if you're Turkey, and if you have gold mines in your country, by all means, they should take their depreciating currency and swap it the hell out for gold. Why not? But that doesn't mean they're going to make a killing, or they're going to be the countries that are going to dominate the world in the future because they have gold and they are smart. So, Joe, it makes a lot of sense for them. There is no real alternative. They can buy dollars, and actually, in some instances, in some years, the dollar is valued internationally higher than gold, but not all the time. So, if you have a gold mining industry in your country, and you can get the gold for the price of production from your domestic miners because you kind of own the country, it's not free market, you could probably get gold for less than market value, take your depreciating currency, buy gold with it. It's brilliant. I'm not against them for buying gold, but I'm against the characterization that somehow they're buying gold to crush the dollar. That's not going to help them crush the dollar. The dollar's not the dollar because it has gold. Nixon established that in 1971. Dollar is still the dollar, and it's still the world reserve currency. It's still the most liquid currency market, and it's still the currency that all these other countries use to issue their own debt. So they're all tied into the dollar-based system, and gold does help them. No two ways about it. I'd buy silver as more upsize. All right. Silver, oh, let's see. Well, I awakened one. I do accept crypto. Hold on, you're not going to get out of this one. I've already sold one Smaulgld mug for Bitcoin. So if you'd like to purchase a Smaulgld Classic or Super Classic mug, all you have to do is the Bitcoin or Litecoin addresses are on the website. You calculate the $23.99 or the $19.99, and you send me that amount, and tomorrow morning you will have your mug on its way. So I do appreciate that. If you'd like to use crypto, I even have Ethereum wallet as well. All right, let's see. We got a lot of comments here. I'll stay with you, though. Hold on. Let's see, Joe. Good comments today. Very good comments. Very, very good comments. Spence Beal. Silver could go to 1280. Wow. All right. Could be. First off, I'd buy a gun. Well, of course. China should invest in Smaulgld mugs. Yet they don't have a high enough mug ratio. Buy a mug, buy a mug. Be a mug, buy a mug, says Joe. Oh, Joe's doing a lot of advertising for me here. Shark Hair says can't post. All right. All right. Gusta broken. I've been blacklisted here and there as I'm on the target. No, you know what it is, Gus? It's not me. I don't do anything. I noticed that a lot of your comments end up in the Google spams them because you have links. If you have links or YouTube videos, the Google algorithm is saying that Gus is a spammer. And even if I don't mind looking at the links, like when you leave them on the comments section, not here, because when you leave them here, I can't look at them. When you leave them in the comments section, I can go and look at them or listen to the music that you put there. But Google doesn't like that. All right. Voraza. Will my investments in gold and silver ever paid off? I always like to think there was a positive case for them, not just doomsday collapse. Now, I'm not an investment advisor, but one of the reason I started this channel 5-6 years ago, focused on gold and silver, was it was about the time when it was confusing. The QE3 had been launched, and gold and silver started going down. I thought that would have been it. That would have been off to the races. I don't like to think that the prices of gold and silver are purely based on collapse. I've been making the argument recently that the silver and gold demand that's basically been underpinning the physical demand has been there largely because of jewelry, not because of stackers buying things because they were expecting the end of the world. But unfortunately, our friends in the gold and silver pumper community, I believe, are constantly telling you about reset, and JP Morgan is going to make a killing, and it's going to collapse, and the COMEX is going to default, and gold back yuan. None of these stories I think have any basis in reality, and yet that's what people who buy gold hold their hat on, and they think that's why they should buy it. It's gonna happen. You'll see gold set to skyrocket, silver shortage, sovereign size buy in 45 days, all this stuff. I can't tell you where the price is going to go, but I can tell you those stories probably have nothing to do with whether the price of gold goes up or down. It has everything to do with probably whether you continue subscribing to these newsletters and to buying gold on that basis from websites that promote that. I think that there's plenty of reasons to buy gold and silver, that you don't need to make up all these stories. I mean, if you label it as speculation, I like to make guesses as much as the next guy. The problem is people insist that these speculative things are true and are going to happen, mathematical certainty. They don't know. And clearly, a lot of it's cherry-picked data or just invented data or speculation. So, it gets tough to know where to invest without becoming a day trader. Yeah, that's a good point. All right. Awaken one. Don't accept cryptos. Darn. Oh, yes, we do. Oh, yes. In fact, I'm not going to let you get away that easily. I'm not asking you to go to the website. What I'm going to do is I'm going to give you the Bitcoin address right here, right now. Boom. There you go. 1995 with shipping. Smaulgld Classic mug. Super Classic, $23.99 with domestic shipping. There it is for Bitcoin. And if you got Litecoin, I like Litecoin. Boom. There you go. And if you are holding Ethereum that is making your wallet too heavy, well, there you go. Ethereum. Boom. No more no crypto. Darn. In fact, if you're interested in, I think these are cool. I'm going to show you these. You can click on these right now. This I get a small commission, I do have to admit. You turned me into a pumper here. Look at this. These are Bitcoin silver rounds, 99% pure silver. They won't let me send that one. All right. Anyway, you go to the website, you can see those. I better stop. Let's go back to the comments. I have a whole lot of mugs on YouTube, more than I can ever use. Nickel and jewelry has been banned. Yes, a lot of people are allergic to nickel. I didn't know that. I mean, I know it now, but I didn't know that a while back. Yeah, who knows? I think a lot of the reasons they use copper and silver is because it's antibacterial. You can use it a lot. Copper is very good because it strengthens the metal, like they put it in the gold coins, because gold's very soft. Just the top. There he is, Carl Joseph DeMarco. Let's talk about you. More into shadow banking products to make money. ASMR people. When hyperinflation happens, currencies become worth a fraction of a percentage of current value. Right. Well, yes, I assume Venezuela has coinage that has copper nickel coins. The face value is now worthless. That's right. In that sense, you still... They're not worth anything. You're absolutely right. Whatever the half a cent or 2 cents or 3 cents they're worth in US dollars, that would be worth, whatever bolivar. So you're right in that case. Real hyperinflation, you're absolutely right. You still have, but it's not the case in Turkey right now, and it's not the case in the United States. But that is a good point. Yes, even the ink is toxic on banknotes. Very good point, Gus. Some good points here. Spence Meal. When government tells subjects to buy their own currency, it's when people really run for the ends. Absolutely. And do the opposite. It's like when President Johnson said, and do not hoard these silver coins. They'll never be worth more than their face value. That's when everybody started hoarding the coins. You're a moderator on a few channels and can add links on the live chat. Alas, not here. Yeah, I guess that is the case. Yeah. I guess I can add a certain amount, but when they saw me, I was spamming, and they stopped me right away. Yeah, you can't do it here. There's your Bitcoin, Smaulgld. Verizon, how much would you personally allocate to your capital? How much in PM's, cryptos, or stocks? I'm the worst person to ask. And again, it's not investment advice. I would look at it this way. I'm not giving numbers. Which one is the most speculative? Clearly, it has to be cryptos. So whatever you think you should have in speculative as a percentage of your portfolio. You may think 90%. You want to swing for the fences. I would say crypto is the most speculative. My view on gold is an anchor. I don't think silver is an anchor. I think silver is much more speculative, doesn't have the same monetary weight today that it had back when. Gold still has that. It's a smaller market, more easily manipulated. I'd say silver is far more speculative than gold. And then stocks, depends on what stocks. Some stocks used to be considered more speculative, but ever since the Fed and other central banks have put like a floor under them by always pumping liquidity into the market, they've actually been the safest bet, which is just very strange. Oh, you're from the Netherlands as well. All right. In silver too. All right, well, I want to thank everybody for joining me tonight. Remember, you can join me each and every night at 8 o'clock Eastern Standard Time. And we'll have another show again tomorrow. I have to get out the Indian numbers this week and a few other reports. We'll have Russia by the end of the week. We'll have their July numbers. And again, I expect them to be decent, but I don't think it means anything. They might add 200 tons again this year. They mine close to 4,000 tons a year in the world. There's there's enough gold out there that whatever Russia's doing isn't gonna impact the gold market, and it's probably not gonna help them very much. But again, they have the third largest gold mining production in the world, so why not buy it? All right, good night, everyone, and thank you very much for all the very insightful comments. Kept me on longer than I expected, but I do appreciate it. Mug life.